Good day, good day. It's been a while since I posted a video, um, just simply because it took me a minute to figure this thing out. And it's still so many levels to the finance game and the money game that, uh, I'm still very much on my level, and I'm going to speak from my level. And as I find out more things and explore them and get a 360 understanding, I'll share my experience. So when I first started this channel, I was staying at home with my parents. I was fresh from college after having my daughter, and I didn't understand it. I did not Things were not adding up. You know, my vision for myself was always to be successful and to save the family and uh, you know retire my mom and things like that. But I had to figure out how to save myself first, and that's still an ongoing process. But as I pick up on things, I'm realizing that because the financial space has so much information, um, perspective is everything. So, I'm still very much coming from a working class guy. I work every day. Um, and that's what this information is for. It's not necessarily for the people who are flipping houses or got brand affiliate deals or have mastered stock options and crypto. Those are things that I'm into. But through the years, I have found that you can wear yourself thin if you're not focused on what you should be doing. And I did a lot of that, and I'll make videos on that later, talking about those trials and errors and figuring out what's real and what's not. But for now, I just kind of want to quickly go through the changes I've made since I have moved out of my house with my family and on my own and started to figure a couple things out. One of the first things I did while I was still with living with my family was I had to understand what value and service was. I was trying to get money, but um, I won't say but, and a lot of the information that I was reading was talking about if you want money, you need to serve more people. If you want money, you need to create more value. Well, you'll hear that a lot in the business space, and I haven't quite figured that out yet, but I did nail that at my place of work. And since then, I have tripled my income, and it's a proven formula. It didn't happen right away, but I just became very valuable at my job, and I put in a lot of service, and then I made my ask to where it's almost like they couldn't say no when it was time for me to ask for a promotion or more money or just even navigating the politics, which exists very heavily where I work. But I kept my head up. I kept my head down working. I kept my ears open and my eyes open and observed the landscape. So, and I'll explore that later. But for now, I just wanted to talk about a few things as we get ready to enter 2026, and a lot of people are entering their benefit packages for the next year and things like that. One of the main things that happened when I made more money is that I needed to give more of it back to the government, taxes. Uh, Man, and it wasn't just me; it was everybody in my department, and I was probably in the middle of the road in my department. There are a lot of young guys, young engineers that are fresh out of college, who are just, you know, I tell them all the time, man, y'all got it made. Y'all 25 years old making this money, like y'all don't even understand. But a lot of them, when I was coming into the department, were whispering about like these tax obligations and these payment plans that they was getting on because they just made too much money. And that's not something that I'm into. I'm not into giving it up. And in my information, I always knew that like businesses pay their taxes last. Um, I just understood that the working person always gave their money to the government first. And, but I didn't know that if you made enough of it, you're gonna have to give them more later as well. Especially when you're doing hours, putting in OT, you know, just giving up making a lot, but just being taxed at incredible rates. So um, for now, I just wanted to explore that, and I wanted to explore if you have if you're making a decent amount of money and you have a tax obligation, what can we do, especially now in preparation for 2026, to offset that? Now, with the new big beautiful bill and things like that, people are um, common information is you can get a business, you can offset business expenses, and if you already have a business, that's good. But one of the things that I've learned and behaviors that I learned in the past 3 years since my last videos is that you don't, I would not suggest people just running to get a business and going to purchase something just to offset taxes. For an example, at the end of this year, in the back of my mind, I'm saying, "Oh yeah, I'm gonna start me a business. I'm gonna finance a vehicle, and I'm making sense of it by saying I'm gonna put it on Turo or a rental car third party company where I can actually cash flow that asset, um, so it makes sense. But you know, this that once again, that's a conversation for later because a lot of people jump ship from their original plans and then they start creating these plays. They start creating these plays where hey, I'm going to do something, and it's not really there. It's a new territory for them. So you're about to pick up an obligation for something that you're not really educated about. I'm not saying don't do it. I'm just saying that as a working person, there are things that we can do before that. So one thing that I really like is the HSA, the health savings account. If you don't have stacked insurance and you're not paying high premium, more than likely you have a high deductible insurance plan that allows you to get HSA. And this upcoming year in 2026, I'll be maxing out my HSA. Before I started to put like 1,000, just in case I had some medical situation. That way I can just pull from that card, and it was more like a savings account. The more I explored that account, the more I realized that that money rolls over. Okay, the meaning that you're gonna keep it. It does not dissolve like an FSA, uh, which is something that isn't another option for tax for offsetting taxes, but it doesn't necessarily benefit you if you don't use it all. You lose it. You either use it or you lose it. I didn't like that either. So the HSA actually rolls over, and with my company, after a certain amount of time, you can invest that. They invest that money. Like after $2,000, basically, once you're able to cover your plan's deductible, you can invest that money into the market, and that money will grow. And you have contributed to that account tax free. You have offset your taxable income, and now you are investing in growing money tax free. So I don't explore that. If you have not heard about that and you work somewhere and you're signing up for benefits this year, I would highly suggest looking at HSAs. And you usually will be able to set offset maybe about. I have a daughter and I have her listed as my dependent, so I was able to offset about I think like 8,500. And at the end of the year, if I don't use all that money, that rolls over um, forever. Another thing I like to do is pre-tax contributions to my 401k. Now, a lot of people talk about Roth this, Roth that, and then and pulling the money out later. But with all this information about how detrimental 401ks are to your wealth and all this, that, and the other, I had to kind of pivot and figure out, okay, if everybody's saying that my 401k is not what it used to be, then how can I take advantage of it? And this is one way that I feel like I can take advantage of it, which is max out my pre-tax contribution, which reduces my um, taxable income. I get the match from my company, not 100%. They match 50% of 6%. So I only contribute 6%, but that's 6% of my income for the year that gets offset. And on the back end, they match that money. And then when they match that money, they don't say it's theirs, they say it's mine. So, and when I go into my 401k plan through the platform that provides it, it's Voya. There's an option that says loans and withdrawals. And when I go to that, depending on how much I've contributed to it, and what I've contributed to it, or what securities I've contributed to, it makes those funds available for um, their a loan. You can take a loan on the money that you have in your 401k. Not 100%, but a good chunk. And that's also, in my opinion, a stacked benefit because I'm an American, middle class American. I have debt. I have consumer debt. Something I'm not proud of, but it's also something that is very real. And I'll talk more about that and how I have navigated that in the past 3 years with paying it down. I have actually paid it down before. Then I got ambitious, used it, and sometimes the play worked, and I was able to get return on my investment, pay off the debt, keep the profit, and sometimes I didn't. Sometimes I was profitable and didn't pay it because I wanted the cash to go into something else, or sometimes the play didn't work, and now I'm still holding weight on my credit card or my personal loan that got a 17% or 29% interest rate on some consumer product. Um, and that's dangerous. That's dangerous, especially, I used to only be, when I didn't have any money, I didn't owe a lot. So 25% on $2,000 with 25% APR or APY, excuse me, I'm not sure, but however they bust it down wasn't that significant. You're talking about maybe $40, $50 a month. But when you make more money, they give you more money. And if you max that out and you find yourself $20,000, $15,000, you'll be paying hundreds of dollars a month in interest. Not even in taking care of the principal. So I just had this thought recently, which actually prompted me to make this video because everybody, these talking heads and these people on YouTube and the financial world, did you know your 401k is killing you? You're never going to retire on your 401k. People with inflation, this, inflation, that. I'll say, okay, okay, okay. So I'll have my self-directed account, no problem. I'll have my crypto portfolio, no problem. But why would I miss out on the 401k uh, deal that they're giving at my company, which is saying, hey, if you put money here, we'll match you. And then on the back end of that, oh, Jesus, man, I spilled my coffee, man. I spilled my coffee. So I forgot where I was, but ultimately, I think I was at the 401k. And basically, what I was saying was that And getting ready for 2026, max out your HSA. That's like a triple benefit. And pre-tax contributions to your 401k can be beneficial if you have some debt that is kind of whooping your butt and you're running that circle trying to pay it, but you're getting hit with the interest. You know, personally, throwing I have had to pivot in the past because throwing all my money at the debt left me with no assets. So I kind of had to balance that out and say, okay, how can I get something and also take care of that? Because I can't give them all of that and then I'm at zero in my account forever. The pre-tax contribution to your 401k allows you to offset your taxable income, take advantage of employer contribution, and then hopefully you have went into some type of funds or that's what they call them, funds, ETFs, or securities in your 401k that are growing. And you can, after you build it, and once again, this is for people who have found themselves making enough money to owe the government. So that means your wages, you put that money is growing pretty quickly. So while you're still making your payments, not defaulting, still making your payments on your debt, you will be building out an asset that will continue to grow, that you will be able to borrow from, that is not taxable. Loans aren't taxed. And you can apply that low interest money to take care of that high interest money and save that high interest that you were paying on that consumer debt. And however you want to apply that is up to you. You can use that and throw that into a self-directed account, or you can expedite your payments back to that low interest loan that you got using leveraging your 401k. So anyway, um, I'm going to get into more things later. I don't want to make this video too long. There are other things like paying children, and actually starting real businesses that involve household expenses. I have to get more savvy on that because, as I'm talking to ChatGPT, and looking up things, it has to make sense. You just can't wash the money through a business that is paying for groceries for the house. The jargon needs to make sense. So anyway, I'll be back with more. The last thing I'll say is don't get too distracted. I really feel like today's um, land grab, as far as real estate goes, is in focus because it's so easy to jump ship and try a new thing and try a new investment and try a new flip. But imagine if you stayed with that thing that you were going to do initially, you'd probably be further. I can't wait for the next one.